Folks, about 10 days ago on the Daily Financial News, I gave a shout out to David Tepper, who basically said, go all in on China. He went as far as to say he is kicking out his portfolio rules of not going above 20%. He was saying buy, buy, buy. Now, in hindsight, he looks like a genius. If you've not checked out the Chinese stock market, I think it is up 36% in 10 trading days. Taylor, what's going on, man?
I don't even know how to make sense of 36% in 10 days. Like it's mind boggling. Those are that's like 3 years worth of normalized gains on average. And we've done it in 10 days. No, the Chinese market has had understand that this thing has come from a point of just no one would touch it. It's a dog with fleas. Stay away from it. And then the central bank, People's Bank of China, steps in and says, hey, we're going to cut rates, more rate cuts coming. We're going to cut bank reserve requirements. We're going to cut mortgage rates on existing mortgages, and we're going to put together a stock market support program. They're going to step in and buy stocks. So, I mean, boom, right? Yeah. Everyone thinks that we were aggressive as a Fed, a couple weeks ago, cutting by 0.5%. They cut by that and said, boom, this, and this is coming.
Yeah, and as I remember, it was like 2 or 3 days in a row. They just came back with more and more and more and bigger and bigger. And this is going to make, for us, we had TARP. I think it was TARP back in the Great Recession. This is, they're going all in. They've had enough. They're cutting everything.
Yeah, this is reminiscent upon the European Central Bank and Mario Draghi when he came out and said, we'll do whatever it takes. Yeah. And that's kind of what it seems like. And what they've rolled out, although it seems massive in light of, what we're doing and what other central banks around the world are doing, it's not as gargantuan as maybe the market made it out to be. But what's also come with it is saying we are going to continue this process.
Yeah, more is some is good, more is better.
More cowbell.
Yeah, exactly. And again, something else they did for the first time is they actually went out and did stimmy checks, or what we call stimmy checks. They were sending dollars to, people of the country. So
they're like, dang, look at those Americans over there just winging money around.
Go do some of that. Let's go do some of that.
Yeah, that looks smart. That looks fun.
Yeah, but 36% in 10 days. It can't keep going at that rate, I would think.
Yeah. So David Tepper is someone that does not generally make those bold, outlandish comments. So when he said that, actually, my partner's my brother, my business partner, he called and he goes, "Do you see what Tepper said on CNBC this morning?" I'm like, "Yeah." He's like, "That is big," and he is like a mega nerd. I'm a nerd. He's a mega nerd. So he pays even more attention to that stuff than I do. But I think the realization again is the fact that literally when things get valuation can be a driver of returns in that of itself. Things are trading at price to earnings multiples. Their broad stock market is trading at price to earnings multiples of high single, low double digits. We're trading at 22, 23 right now. And so for every $1 or yuan worth of earnings, again, they're trading at a third of the multiple that we're trading at here in the States. And it just took a little bit of good news to be a spark to ignite that. And the central bank, People's Bank of China, can go ahead and do that.
Yeah, I don't know the numbers. You may have this, or I may have to look it up next time. I don't know what percentage of the Chinese population is actually invested in the stock market.
It's a good question. I don't know, but I know a higher percentage. Okay. No. Let me put it this way. What they are completely dependent, and this is nothing you don't know, what they're completely dependent upon is the price of their real estate.
Correct.
So, yes. And their real estate had been completely depressed, right? So they went on this big kind of countrywide, central government driven, hey, let's oversupply the market. People are going to move from the countryside into the cities, et cetera. And you have seen this firsthand. You've talked about it, but just a massive oversupply to the market. They're on the other side of the coin that we are, right? We're in an undersupply. They're in a massive oversupply. But the difference there is their retirement is contingent. Individuals' retirements are contingent upon real estate. And the real estate has been bust there.
Yeah. If anybody wanted to really understand what people call the wealth effect or the negative wealth effect, go look at China. You're absolutely right that the majority of, the Chinese citizens, real estate is their quote unquote 401k. It is their retirement. They often buy one and then buy another just to have it as an asset. And when that went kaput, the entire system, didn't work. It's not functioning, right? What happens when consumers get scared? It doesn't matter if you're in the US, Japan, China, anywhere. If your consumers are scared, they conserve.
Mhm.
That's what they're doing, and they've been doing it for 2 years, and I think, you know, it's gonna be wild to see if they come out of it. This Stimmy's not gonna help them come out of it, I don't think.
And it's crazy because if you remember back when we were coming out of COVID here in the States and
Mhm.
stimulus checks were pumping and we're moving out and people there are very loose rules, if any rules at this point, and China was still in like nearly full lockdown mode.
Right.
And then the narrative at that point, if you remember, was man, when these things get the shackles get taken off the Chinese population, like this thing is gonna go bananas. And the shackles have been taken off at this point, and that narrative couldn't have been any more incorrect.
No, they broke the psychology, right? That you've scared the populace, and a scared populace conserves. Don't
Yep.
spend. No discretionary spending. I mean, you saw it in Starbucks. The first thing I think we talked about it 18 or even 24 months ago. It's like, oh my God, you see those Starbucks numbers in China,
Yep.
right? They're conserving there, right? That just tells you what's going on. So it's going to be interesting to watch. Again, we also seem to, I think it was 31. We had 31 rate cuts last week. Only country raising is Japan.
Yep.
It,
Yep.
it does feel like, we're the cleanest dirty shirt of the US economy.
And our market is responding accordingly. And the Japanese central bank going the other way, when everything is sloshing in one direction and something gets yanked like that, like that's what happened in August. In
Mhm.
early August, when Japan decided they were going to rate hike, this was when we were all in cutting mode, and then you had this snap higher of the Japanese yen, and then all of a sudden that Japanese carry trade that everyone became experts on overnight unwound, and you see that. So like it's just everything feels really good right now, I think, and from an economic backdrop standpoint here in the states, and it's just I think that there's a lot of it's tough to poke holes in, right? There's no really bad glaring data out there to say, hey, this is really worrisome, and I think the market's priced accordingly. Don't get me wrong, so stocks are priced accordingly, and we'll see. I also feel funny to say that like is anyone really talking about the election that's happening
Yeah.
in a month?
Yeah. Like 30, 28, 29 days from now.
Doesn't
Yeah.
it kind of feel like that's like an afterthought right now with what's going on globally? It's you don't hear much about it, and maybe that's a good thing. Don't get me wrong.
Yeah, yeah. We're not going to be talking about it. That's for sure.
Right, exactly.
Man, Taylor, you're doing amazing stuff. 60-second education. Where can they go get it?
Yeah, find us at LifeGoal Investments, and we're on both Instagram and on TikTok.
Thank you, buddy.
You're the man.